Hello everyone and welcome to the Week in Markets. So I'm Chris Leyland, I'm the Director of Investment Strategy here at True Potential, and I'm delighted to be joined by Joe Forward. So Joe is an investment analyst that works with myself and the investment team. So Joe, as always, lots and lots happening within asset markets over the week. I guess probably one of the key things that has been happening, maybe less so at a data level, but more so at a company level, and that is the US earnings season. So this week we've seen some of the biggest US companies reporting their quarterly results. So do you want to bring that to life for the viewers?
Absolutely. So what I really wanted to do was actually recap some of the earnings that Paul reported in his morning markets on Wednesday, those being Tesla and actually Alphabet, the parent company of Google. So starting with Tesla, their profits actually came down 45%, which is a significant drop. And it was really driven by an increase in some of their spending, some layoffs they actually had to do as well, but then a decrease in the sales. And this really did hurt some of the share price. You also saw actually Elon Musk guide that their robo-taxi service is going to be unveiled later than expected. And this is essentially a service that will be self-driving taxis. So definitely one to keep an eye on. The share price on Wednesday actually fell 12%, so a big fall there. Now, looking to Alphabet, it was a bit of a different story. So some of the earnings reported were actually really positive. So their revenue streams actually increased 14%. And this came down to really two aspects. One being the cloud computing aspect, where there were increased sales due to increased demand, but then actually down to their ad revenue coming from the search engine, which, given where we are now with AI coming into search engines, it really proved that Google is still the main one out there despite the competition that you're getting. Now, where the negative news did come through was just, again, in some of the spending. So they actually ended up spending a bit more on their AI infrastructure. I think it was actually projected to come in at $12.2 billion, but it ended up coming in at $13.2 billion, so $1 billion higher than what was expected. And so, investors didn't take to this too kindly, and you actually saw a bit on Wednesday a 5% reduction in the share price.
Excellent, thanks Joe. I mean, maybe just the kind of discussions that we've been having as a team, but also Joe and myself actually had just before we were filming this. And that is really, we need to maybe put this into perspective a little bit. It has been a very volatile week for US equities, but actually what you need to remember is that those big mega cap equity stocks, actually a lot of them have had a really strong year so far, and certainly a lot of them have also had a really strong 2023 as well. What you're seeing now is maybe some investors becoming a little bit nervous of where valuation is, where pricing levels have got to, but also on the other hand as well, you've got to remember, they're linked to artificial intelligence, and actually artificial intelligence will become a more significant part of everything that we do overall. But look, let's maybe move away from the company side of things, and let's maybe move to economic data. And one piece of economic data that we monitor ourselves is something called PMIs, so Purchasing Manager Indexes. And Joe, do you want to just bring that to life? Maybe just actually start with what is a PMI, and then maybe look at that regionally just to give some idea of the figures that have come through.
Yeah, sure. So just a reminder, PMIs, they're essentially surveys that go to businesses globally, and it really gives us a sense of actually how the economy is doing in these different regions across the globe, exactly how countries are doing in their economy. So if we think about what came through this week, on Wednesday we had loads of PMI data come through, and the big thing for me was actually the US being particularly strong, so showing the highest expansionary result that it has had since April 2022. Not far behind it was actually the UK and Japan, so both again in expansionary territory. But then maybe just lagging behind a little bit was Europe, so just one to keep an eye on there. It was still expansionary, but a bit lower than its peers, so just something that we'll be looking at. And something else about the PMIs is they're actually split into manufacturing and services. And when we looked at the manufacturing PMI, it was really interesting. So it actually showed that the UK was looking particularly strong, so really expanding, but maybe just a bit of a dip off in those other regions that I've mentioned there. And services on that side actually has been one that's been quite sticky. Services have been performing very strong in global economies, and so they've remained at elevated levels.
Excellent, thanks Joe. So maybe just the final point, this came through later in the week, and that is US GDP. The level came as a surprise. I'm pleased to say it came in as a positive surprise. So you saw quite a significant beat there compared to expectations. I probably already have stolen Joe's thunder, but I'll try not to steal it any further. Joe, do you want to give an idea of the numbers?
Yeah, so George mentioned earlier in the week on morning markets that it was estimated to come in at 2%. It actually came in at 2.8%, so quite a significant beat compared to what was expected. And initially, some of the share price reaction has been pretty strong, so again, something we'll keep our eye on and monitor as we go into next week.
Excellent. Well, thank you, Joe. And thank you all for watching today. I hope you enjoyed today's Week in Markets. And myself and Joe look forward to speaking to you all soon. Thank you.